bank earnings in the spotlight once again. Bank of America making 56 cents a share in the third quarter. Revenues coming in at $28.45 billion versus expectations of $25.95 billion. Scott, what's the stock doing pre-market and how are you trading it today?
When I first came in here, it was down 15 cents. And when I checked on it again, it was up 5 cents. It's been all over the map. And right now, it's almost flat, which I think is a win for this stock. This stock has been the whipping boy of the entire financial sector. Washington ralliers, the Occupy Wall Street guys, everyone's after it. And if you're in this stock still, you've probably broken every rule possible because it's broken so many levels. So at this point, if you're investing, I think you have to hold it. For a trader, I don't think people are going to really be trading it or buying it. They're just going to watch to make sure that it doesn't fall apart. So this way, they could coordinate it to the market to see whether or not we could hold some of the lower levels.
And the stock is still down 57% for the year, but up 9% in October. So I wonder if there's a little bit more juice left, do you think?
So let's take a quick look at the chart so I can just show you here. As you can see, if you didn't sell this, you missed your opportunity. You could have sold it at 13. You could have sold it when it broke this level around 9. And then even more recently when it broke this wedge around 7 to the downside. You take a closer look here. This was that last area, okay, and then now you have the low that was put in, okay, decent move off that low, back to somewhat of a downtrend line, and it's trickling. I would say, traders might actually look to buy this thing, versus this the mid fives, and if any particular reason, I don't know why it would happen, if all of a sudden, it starts to squeeze the shorts because they couldn't take it lower, this stock starts to get above 640, it could see some upside, but that's a big could. So at this point, I just want to see it hold in there and not be a headwind. And if you're an investor, at this point, you just have to hold your nose and wait a few more years.
All right, Loa, a few more years. Let's go to Goldman Sachs here, reporting a loss of 84 cents a share. Expectations were for a loss of 16 cents a share. We're not sure yet if that's comparable. Revenues came in at $3.59 billion versus expectations of $4.3 billion. Now, investment banking net revenue came in at $781 billion. Expectations were for under $1 billion, so that was kind of a big boost. Stock is down 44% for the year, but up about 7.5% for October. What's the stock doing?
So the long-term trend has been lower, especially the past 6 months. We did get a move off the lows, and those numbers, aren't horrible, especially considering the environment and this company that could never do any wrong. Now it seems like it can't do anything right. But at this point, once everyone thinks they can't do anything right, that's when they can get you. So if you look here at the chart of Goldman Sachs, it was down only like $1.50. Coming into this, it looked like it was down 4 prior. I would trade this versus 92. 92.25 is some type of support. If you could hold that, and all of a sudden they say it's priced in, perhaps it breaks this little mini wedge to the upside above 98. But you'll see no momentum in the stock until it starts getting above 98. If you want to buy it versus support, you have 92.25, and then you have a low all the way down here, which was 84.27. So if 92 starts to break to the downside and Goldman doesn't hold that, you're going to see pressure on the overall market and it won't be good psychologically.
All right, so Goldman and Bank of America just have to hold up. That's the takeaway for today. For more complete earnings coverage, check out The Street.